here we are, everybody. It is January 2nd, 2020. It's Thursday. We've got the markets open and we're going to be trading today. I'm going to be showing you what I'm doing. But this year, I'm taking on a little bit different flavor for the channel. Taking Trades is going through a little transitional period here. And I'm going to give you a little more behind the scenes stuff. I know before I was always in front of my curtain in the office and breaking down trades and just kind of showing you exactly what I did, talking about the news, this and that. But I'm going to actually kind of take you a little more behind the scenes and jump into how I'm finding stocks. I want to show you why I like certain options trades. You know, I'm going to be talking a lot more about the option chain and how I pick out specific trades and how I determine how much premium I want to make. And the types of trades I'm taking, I just want to go through it all, be a little more transparent as far as what my day-to-day is like, because it's definitely a process, and it's not, it's not uber sexy like day trading always is, where, you buy 10,000 shares and 18 seconds later you're hopping on your yacht and heading out into the sea for a day of fishing. So it's a little different than that. It's snowing, it's about 15 degrees out here, and I just got back from the gym. Just fired up some coffee, so I'm ready to go. I'm going to open up the computer now, start looking at what's moving around. Spoiler alert, the SPY's moving a little. I was looking at it just a bit ago, and the SPY's up this morning, which is exciting. It's always good to see, especially if we start getting stuff about China. China talks, anytime something's moving forward there, that sends the SPY up, which gets me excited because, I've got different shares placed on different stocks that I would like to dump into a strong move. So I'll talk about that today a little bit as well. But let's go ahead, let's open up the computer. I'm just gonna kind of walk you through my day. So let's head over. I sit in a chair in the living room, and let's just show you that. So let's head on over there. Here's my fancy setup. It's just me and my fancy chair here with the laptop. Kind of fireside. You can see the fireplace. That's kind of nice, right? So just, yeah, here I am. I'm going to log on now. I'm going to open up my platforms. I run two platforms basically all day. I basically open up TD Ameritrade's Thinkorswim platform. I run that all day, and then I also open up tastytrade has a platform called Tastyworks. So I have a small account in Tastyworks, and then I have 3 larger accounts in TD Ameritrade. So I run both all day. So you might see different screen setups. I'm kind of hopping back and forth all the time. So let's go ahead and let's log in there. Let's get down to business here. We're burning daylight. So let's bring you over here a little bit and let's take a peek and see. I'm going to give you the behind the scenes stuff here. So you can see this morning right now, I've got the SPY up on the chart, and you can see that gray box is all pre-market after hours stuff. So after hours is sort of the first part, on this side, and then pre-market opens up, and we've just kind of been working our way to the upside. Pretty good pullback right here. If I can zoom in a little on that, you can kind of see that a little. But that looks like a nice little setup, nice dip before we head higher. So I'm curious to see what's going to happen there. But right now, SPY's looking pretty good, so I'm just going to be looking over some other stocks and just see what's moving around, and then I'm going to kind of keep you guys updated as far as what moves I'm making. So let me know what you think of the new format. It's just sort of me kind of giving you a raw look at what I do every day, and just changing things up a little bit. So if you like it, give me a thumbs up. Let me know in the comments if you hate it. Maybe just keep that to yourself. So just kidding. All right, we'll be back here in a minute. Hey, if this is your first time stopping by the channel, I want to thank you for checking us out. And if you like what you see, hit that subscribe button. If you like the video, hit the like button. We'd love to have you stick around for a while. If you're a returning subscriber, I want to thank you for all your help in 2019. The channel grew like crazy. It was an exciting year. We're moving into 2020, and you're going to notice a few changes coming up. You're going to see a little more vlog style behind the scenes taking trades. It's going to be a great year. I'm going to be showing you the small account challenge. I'm still going to be showing you all the things I've normally been showing, but adding a little more transparency, a little more deep dives into my accounts, more of my day-to-day positions. I'm going to start showing you guys a little more of the logic behind what I'm doing, and basically trying to show you almost every trade that I'm taking so that you don't miss anything. So a little more vlog style. We got some snow going on. I don't know if you guys can see this back here. Nice and snowy today. So here at the house, just getting my trading going. We're gonna dive into some things. I'm gonna show you some positions I'm looking at. It should be a good morning. But I want to thank everyone for stopping by. And if you haven't joined our free Facebook group, feel free to pop over there. There's a link in the comments. And if you want to follow us on Instagram, there's a link in the YouTube banner. You can click that, follow us on Instagram. Would love to interact with you over there. You can ask questions on any of the platforms. If you have questions about this video or anything that's come up, you can post them down in the description, or you can hit us up on any of the other platforms. All right, thanks. So we're started, the trading days kicked off. We're looking for some things, and I want to show you guys how I look for stocks when I'm looking to put on, when I'm looking to sell premium with put options. I use Finviz, finviz.com, and I'm going to flip you over here real quick and just kind of show you what I do. But it's pretty simple, and I'm just going to flip you around real quick and show you. This is Finviz, and what I like to do is I actually just come up here. I have some screens that I've created, and you can do this. It's a free account. It's pretty simple to do, but I like to go to market cap and look for either large cap or mid cap and above. Sorry for these annoying ads. And then performance. This is kind of the key. I like to go for a performance of down minus 10%, and then I look for stocks that are over $15. And that's really it, other than just trading US stocks. And when I scan that, what you can see is I start getting some companies down here, and I can come over here and I can actually, apologize for having that in the screen there, I can actually come down here and you can look at the change here, and you can actually filter it, and you can look at what's been down in the last month by 10%. And then you can start ranking them by something else you like maybe by market cap. Like I like to look for maybe largest to smallest. So I can come in here and I can say, okay, what's been down? And I see that Boeing, Roku, Okta, a lot of these that I'm familiar with, Lyft. And what I can do, and this is the really handy part, is say I just hover Boeing, I get that little thumbnail that pops up. And that shows me and gives me a good idea of just the trend. So I go to Roku, I go to Okta, and I can look and see if I like how the trend looks at this time. So I've talked about this in the past. I like to look for stocks that are trending to the upside, but that have had maybe a dramatic pullback or a shift in their price action. If a stock's just beat up and not doing anything and it's just looking dead, I like to be able to see that on the daily chart. But Finviz just gives me a really good way of hovering those tickers, getting that thumbnail to pop up, and then that just gives me a really good indication of, okay, this stock is uptrending, or this stock is moving in a way that I like. It's also down 10% in the last month, and then the contrarian inside of me comes out and says, okay, now maybe it's time to sell a put option, or maybe sell a put spread, or if I like the company longer term, if I'm thinking I want to just dabble a little bit and nibble some shares, I'll start to add to a position or buy a few shares at that lower price, and then I be patient, I wait, I see if it continues lower, and then if it continues lower, I can add to my position. But this just gives me an at-a-glance indication of what the stock's been doing on a daily chart over the last, few months or so. So it's kind of a nice thing to just take a quick look at. So I just want to show that to you guys real quick. So I want to update you guys on a put option that I put on last week that I'm looking to take off possibly today if I get the right price action. So I want to show you that, and if you don't know what a put option is, a put spread more specifically, check out this video here and that'll break it all down. Then once you're done with that video, come on back and I'm going to actually show you the position in my Thinkorswim platform right now where I put the trade on, and I'll show you sort of the parameters of it, where the strike is and where I'm looking to take it off and what percentage profit that I'm looking for. So let's flip over to the chart real quick. Okay, I've got Roku up, and I just want to show you guys real quick what I'm looking at. And it's funny, I just said I was looking to take this position off today, but now it's looking a little less likely. So
if you look at the price action over here, I'm going to draw two lines. I actually have two positions, and this brings up a topic of diversification when you're trading options. One thing to know when you're selling put options or put spreads is that if you want to get larger in a position, one strategy for diversifying so that you're sort of defending against being overexposed or having too much risk is to say you want to put on two contracts. Instead of putting them both on at the same strike, you can actually split it up and put one at one strike and the other at another strike. And that way, if one gets affected, there's a chance that the other won't. So it's a way of diversifying your position. And I'm going to draw two lines here. So my first strike, my first put that I sold is actually right here at 120. And then the second one I have on is at 110, and I'm just going to go ahead and make these a little more exact here, and we'll just make it a solid line so you can see a little better. But these are my two strikes that I have, two put options, and if I make those both solid, so you can see this position right here. So if it starts to approach this first line, this is going to be affecting my put that I sold last week. And then if it breaches that and continues on to this one, this is a separate trade. So these are two different trades. These aren't put spreads like we went into in the video I showed you guys. These are actually naked puts. These are puts without the downside protection. I collected more premium because I didn't have to buy the put option for protection, but I'm looking for a push up in Roku. And if Roku were to push up high enough, I would look to manage this trade at about 50 to 55% profit. That seems to be kind of the sweet spot that I like, and I follow tastytrade.com, and all of their stuff and all the research they've done finds that it's best to manage your trades around 50% profit. So if I could get 50% on that, I would be looking to take both of those off. But I wanted to show those to you today that I've got two trades on, and I'll be watching those through the day. If I do get to the point where I am going to take one of these off, I'll flip the camera back on and I'll try to catch it, and I'll show you what the profit's looking like and the exact percentage where I did get to take it off. So I want to just show that to you real quick.
All right, it's also time. We need to talk about the small account challenge. I haven't updated you guys today yet, so I wanted to go ahead and talk about that a little bit, show you my positions there and what's going on exactly. There hasn't been a ton of movement. I'm kind of looking at things right now. Things look good still. Got two that are green on the day and two that are red, but no positions to adjust yet. We'll actually look at that again tomorrow. We'll be 21 days out on two of the positions, so I'm going to show that to you real quick right now.
Okay, you remember the other day I went ahead and took the CGC position off that we had. So that left us with four positions in the Tastyworks account. And so starting right now, we're up $559.42 in the small account challenge after really only having this open for the last few weeks. So we're doing well so far. I want to review the positions today, what's going on. You can see right now I'm in the money on two positions. If I open up UNG, you can see it dropped to 1650, and my strike on this put spread is 1650. So right now we're in the money. It's kind of oscillating. It'll go up a penny and I'll be out of the money. So it's right on that line. But I'm going to be watching this because you can see right here under days to expiration, we're at 22 days. So starting out tomorrow, I'm going to look at this position and I'm going to make a decision on whether or not I still like the position. Do I just close it and call it, or do I go ahead and hold on and roll it out another month, add another 30 days of extrinsic value to this trade, collect a small credit, and then wait to see what happens. So we'll make that decision tomorrow. So tune back in tomorrow because that'll be good to talk through that, and I'll show you how to execute that roll in the Tastyworks platform. So that's UNG. We're not going to do anything with that now. And then X this is an iron condor, which is a put spread that I sold in combination with a call spread that I sold. So you're sort of sandwiching the price action between a put spread and a call spread. And you can see I'm getting breached on the put side at 1150, and we've got 22 days to go. So I'll make a decision as far as possibly rolling down. We'll see what we do. We're $1 wide on both sides, and I've already collected some credit. So I'll see what we could get for a potential roll. And this might be one that that I roll ahead, collect a credit, so I'm closing off my risk. We wait and see what happens, and then if it's still not looking good, we'll let a few weeks go by, and then if we can get out for a small price, we'll do that and just take that small loss. But right now, if I go ahead and head over to the trade tab on this one, you can see that right in here, let me zoom back out a little bit. There we go. So you can see we're getting breached on the put side. The P's are puts and the C's are calls. So I might be looking, if it keeps dropping, I might be looking to roll this call, the call that I sold, down to 12, and the call that I bought, I might roll that down to 13, and we'll see what kind of credit we can get and kind of go from there. But we're $1 wide, so any premium we sell is going towards that $1 wide risk zone. Every time I collect a credit, I'm making that $1 wide zone smaller as far as my overall risk on that. So I'll keep you posted on that one. We're going to manage that one tomorrow. So that should be an exciting day tomorrow to kind of go through and clean up some of these trades. Then if we look at FedEx, we've got an iron condor on FedEx. FedEx is kind of sitting up about 76 cents. So it's still in the sweet spot between my put and my call, between 147 and 155. If I show it to you on the curve here, you can see here's my call, here's my put. We're right kind of in the middle. So everything's looking okay on this one, and we're still 29 days out. So we'll deal with this one next week. And just to mention, I talked about diversification earlier, being you can put things at different strikes to diversify. Well, another way to diversify is to not put all your expirations on the same date. So if I open up UNG, you can see we're 22 days out on this one, but 29 days out on this one. So also laddering your expiration dates between the products you're trading is another effective way of managing risk and keeping yourself diversified. So I'll close that one up. We're not going to do anything with that for another week. And then Roku, the one that I was wanting to have go green, and what's funny is it actually did go green. Let's take a peek at it real quick. All right, so Roku right now is showing that it's up 59 cents on the day. I have a put spread. This is actually a different one. This is in a different account, so you can see how I'm approaching that diversification. In the TD Ameritrade account I had, sold a put with a 220 strike or a 120 strike, and I sold a put with a 110 strike. Now you can see in the small account, to be more capital efficient, I sold a put spread in here, but you can see a 125 strike that I sold this put at 125, and I bought a put at 120. So if I go ahead and bring this one out on the table, you can see sold this put, bought this put. My risk is $5 wide. Here's current price action. So looking for this to continue to press down and get out to 21 days, and then we'll make a decision. Now on this one, if we get to 21 days remaining, because we're at 29, if I have profit on the trade and I feel like the price action is slowing down or things just aren't looking good, I'll just take whatever profit it is and walk away. If I still like it, then I'll go ahead and I'll roll out probably 1 month, and I'll give it more time to see what's going to happen. But for right now, we're going to sit tight on this one and make a decision in a week. So that's your update on the small account challenge. Let's do a calculation. And I went ahead and did a quick calculation on our profits so far on the small account challenge. We're up $559.42. We started with $3,000. So right now we're up about 18.6% cash-wise in this account. So really, really excited about the progress so far. So stay tuned.
I want to thank you guys for stopping by. It doesn't look like I'm going to be able to take off any positions today. MDB, Roku, Okta, all these names that I'm looking at aren't cooperating today enough for me to reach 50 or 55% in order to close the position. So stay tuned, because tomorrow I'm hoping we can take a position off, take some profit. I can show that to you guys. And also remember, we're gonna manage the 2 positions in the small account tomorrow. We're gonna manage X, which is United States Steel, and we're gonna manage UNG, which is the United States Gas Fund. We're gonna manage both of those tomorrow because we're 21 days out from expiration, and that is when we manage our options positions, 21 days to expiration. So stop by tomorrow, leave me a comment, tell me what you think of the new format for the channel, and we'll be back for episode 2 tomorrow. Take care.